Off, let's connect with Neeraj Moga, Assistant Vice President, Research Head with Veritas Investments. Veritas has downgraded their price target for DLF and they feel the real price target for DLF is sub 200 rupees. Neeraj, morning. Thank you for joining us. Your report talks about a lot of issues, a lot of headwinds, what currently DLF is experiencing. What, according to you, is the main reason for such a negative view on the stock?
To the extent when you refer to negative view, you're discussing the company's valuation, and our estimate that it's maybe worth less than half of it is trading currently is just an opinion, and we believe many investors seem to be overvaluing the company's prospects, both in terms of its ability to deleverage its balance sheet as well as to generate cash flows from its operations and grow its business. And therefore, we believe the stock should be worth mostly half of where it is trading today.
Right. Neeraj, you raised a concern that DLF lacks execution capability, and the claims they are making in terms of the land bank and in terms of the total square feet of land they are sitting on. There's a big question mark there.
Our contention is that it is the job of the management to look through the noise in the marketplace and guide investors, as well as build a business around a plan that is sustainable. To the extent management actually was unable to execute on all the plans that they laid out, in spite of proclaiming to be India's best run, best management and best managed and largest real estate company, suggests that they do not have the execution capability, and the promises that they make, they're unable to keep. And it is not that we are saying something that is not known in the marketplace. It is clear that every plan that DLF has laid out, either in terms of asset divestiture in order to delever the balance sheet, or in terms of growing its business, has not come to fruition. And therefore, it is, I think we are right in saying that most of these claims were fanciful.
Neeraj, hi, morning. Most of the debt on the books of DLF was taken for land acquisition. So don't you think, DLF has assets to back the debt pile?
I don't believe that there's a ready answer for that or a straight answer for that. Yes, some of the debt may have been taken for land acquisition, but to the extent there's debt on the books, it is accreting interest on a yearly basis, and it is the job of a developer to be able to ultimately convert that land into cash flow generating assets so that the net asset value of the company increases over time. It is apparent that DLF is finding it difficult to execute on its plan and convert that land into cash flow generating assets. And therefore, to the extent the land sits there, the value of that land may appreciate in an inflationary environment, or so does the interest cost associated with that. And DLF is in the business of generating revenues and developing land, and not in the business of holding land and selling it for gains later. And those are two distinct and different aspects. And therefore, it may be true that some of the net debt on the company's books is backed by land assets, but we do not believe that in case of a scenario where the company has to deliver its balance sheet by selling these land assets, it will be much accretive to shareholder equity valuation. We think, for instance, the NTC Mills land in Mumbai, which is rumored to be on sale, the carrying cost of that land, including capitalized interest and development cost, is approximately 1,600 to 700 crores, whereas the most recent rumored bid on the land was 2,400 crores. And therefore, the difference of 700 crores the company has perhaps earned over a period of time since they have owned the land. So it's not that the company is adding significant value to its business by developing these land assets. And therefore, we believe all investors that are invested in DLF, assuming that the company can generate significant value for them over time, are perhaps being too optimistic.
Neeraj, the company has given a strategy to get debt to levels of 10,000 crores in the next 2 years. Do you think it is possible?
Well, if you look at management's track record, they have failed to deliver on every promise that they have made. So there is no reason to believe what they say will happen in the future, and every promise they've made in the past, they have been unable to deliver on.
So can you just elaborate more on the kind of promises the company made and where they have failed to deliver?
For instance, the company wanted to be one of the largest operator of hotels in India, and they want to have 4,000 rooms in operation by 2010 or 2011, and now the entire hotel business is for sale. They tried to be joint venture with Lang O'Rourke in terms of construction, engineering, etc. services, and then they said that, okay, this JV is not working, so we're going to take the entire process in-house, and now we're going to be able to manage it better. And then they came out again recently and said, oh no, we are not a construction company, we are a developer, and therefore we are going to outsource our business process and construction business to Shapoorji, Pallonji and Larsen and Toubro, which again suggests the management has no control and no vision in terms of how to carry its business plan. They keep on changing their plans and continue to not deliver in the marketplace.
So Neeraj, as per your valuations, how much is the non-core asset portfolio valued per share, and which assets do you feel will be sold on priority basis?
Well, management would like to sell as much of its non-core assets as soon as possible. But I do believe that one of the assets that may be able to be sold early is perhaps the wind power asset. But again, management knows best. In a high inflation environment like India, where there's significant issues related to India's economic growth, its currency, and the fact that rising oil prices are going to have a negative effect on India's current account deficit, and most investors that will be looking to buy these assets are likely foreign investors, which have their own issues in developed markets. I think you have to take management's plans and claims with a pinch of salt. The DLF might have to hold on to these assets for a much longer time period than it is perhaps guiding the marketplace to currently. For instance, power assets were on sale for 2 years ago, and they got a bid of 1,000 crores. And over time, it seems power assets have not increased in value, because right now, again, they are perhaps being valued at around 1,000 crores. So, but just based on time value of money and inflation environment, in real terms, the value of those assets have declined.
All right, Neeraj, appreciate your time. Thank you for your insights. Veritas is a Canadian-based research firm, and to their credit, a couple of their sell calls have been on the button.